Hey, good morning, subscribers. It's Tuesday, March 4th. Um, if we take a look at yesterday's market action, the whole Ukraine situation and Russia is certainly something that is I'm watching very closely. Had a lot of talks with clients and some of you guys on the phone on this stuff. But really, from a technical point of view, and I think that's really what we need to focus on at this point, really not a whole lot has happened. Okay, so for example, the S&P actually managed to hold its 8-day moving average. That's the closest moving average that makes sense to look at on a non-intraday basis, I should say. So the next support level, if we break below yesterday's closing level around 1845, really is somewhere around 1815 to 1820, and that's sort of made up of 21-day moving average. That's this yellow one here, and the 50-day moving average, which is not on here. So that's just for a little reference. If you look at individual sectors, like I said yesterday, look at the energy sector. This is just not something that looks bad. The energy sector looks like it's ready to go higher. And by the way, actually, guys, look at this right now. This is a 30. I'm going to do a 1-hour chart of the S&P futures. Okay. This is looking back a few days, and you can see right now we're actually literally within 5 handles of the all-time high of the S&P. Again, we had a big rally overnight here. We're back up at 1%. So that's pretty much where we are, and I just have a hard time imagining we're going to fall apart here. I do think we have a few more months at least of upside here, even if it's only marginal. Anyway, energy sector, you can see here the sort of proverbial triple top here. It's basically a myth, doesn't really exist. So I do think the energy stocks can go a little higher. Look at something like Devon Energy, for example, a stock that I added on the watch list late yesterday. It's basically forming a very nice bullish pattern here, which if it breaks above $65 really could lead into the high 60s. So, a stock here that acts well, technically held, ended up holding its 200-day moving average down here. So this kind of stuff keeps coming on my radar, and it's just very difficult to get very bearish if you see that kind of price action. So in terms of stocks, I'm looking at them. There's a lot of things in my radar this morning. Even something like, excuse me, the Fresh Market, which yesterday actually posted, or 2 days ago actually posted a pretty decent turnaround. I'm looking for the stock to get back above $34 or so. Potentially give it a shot alongside. I will let you guys know of all those stocks in the watch list and some other updates as I come about. UNH, United. Health I've been talking about for some time. Look at this thing; it just keeps looking good. I would like to buy it. I just didn't really feel like buying it yesterday into that whole uncertainty. What else? There's just a whole bunch of stuff setting up. Even Hess on the energy front. I've talked about Hess for some time. It just does not look bad. It's got very defined risk here if the stock can somehow get back above the $81 area, it really has a lot of room to go. So in terms of price action yesterday, what I did do, just to take a little bit of risk off the table, I did close Microsoft at a loss of 1.57%. The stock still looks just fine. I just wanted to take a little bit of risk off the table. That's really more of a portfolio move than a single stock move. Okay, so if any of you guys are long Microsoft along with me, I think the stock itself is fine. I just want to take some risk off. But what I did do, and by the way, I will buy Microsoft again if we see another push higher. I'll definitely start buying it again. But I did buy though is PBI Pitney Bowes. This was in the Sunday evening, Sunday afternoon chart post that I did. Look at this thing. Just really had a marginal breakout yesterday. It's all on the blog, so go have a look. Have a look there. But you can see marginal breakout here yesterday, and this really should have room somewhere towards $27 over the coming weeks, if not maybe a couple of months or so. So we'll see how that goes. But I want to just get a little bit more defensive given the whole uncertainty. The rest of the stocks, quite frankly, I think look fine. Let's quickly go through them. CMG, Chipotle Mexican Grill. A lot of the higher beta names actually took it a little bit on the chin, but you can see Chipotle basically just made it to the bottom end of its trading range. Nothing bad here, just a sort of a down day. Look at the banks, Goldman Sachs. Remember, I'm long Goldman and Wells Fargo. Yes, they're right back into the trading ranges, but they're not looking bad. Okay, and I think that's really the thing we need to understand here. ABX. just doesn't seem to be able to get out of its own way, but I do think over the course of the next few weeks, maybe it's going to take a month or two, this stock will again find its way higher. Gold, of course, rallied yesterday, and some of the other mining stocks like Newmont Mining too, just couldn't really close anywhere near the day's highs. So it's more of a it's not a single stock issue with ABX, but we're still up like I think almost 30% on the trade. Ryder, just like some of the other stocks that rally maybe too strongly over the past few days, had a bit of a down day, but we're still up I think almost 4% in that stock, so that's okay. Guild also just like some of the other beta stocks, it's it could have been a better day yesterday, but it's not falling apart, so I'm going to stay long with this. Although I have to say, some of the biotechnology stocks are getting a little bit frothy, so I will be keeping an eye on that. Last but not least, Tesla had an up day yesterday, but again, I think I've made myself clear, and just the last time I'm going to mention it, but I do think if you short the stock, you should have gotten out when I said so last week. If you're short 4 out of the money strikes, June calls like IM 280, then the stock can take some more time, and then we'll massage this trade into something like an iron condor or some sort of a spread. So this position is not one that I'm looking to rush. This is when I'm really looking for time decay. I do think the stock's better off at 220 than at 280. Just from a technical point of view, but that's aside from the fact if it goes to 280, I'll sell further out of the money calls, and maybe looking into selling some far out of the money puts here if I can get a chance in the next couple of days or so. So that's pretty much what I'm looking at. Again, there's a lot of stocks actually looking good, but I'd like for the broader market to show some real strength here. And again, you saw the futures just now; they're looking better. Putin just made some sort of statement, so it's all good. So hope this made sense. Any questions, as always, please let me know. Take care.